You are presentation portion of today's forum. So again, thank you to Elsie and Melanie for being here with us today. They are here with the United States Department of Labor, Wage and Hour Division, and Elsie is going to share a great deal of information with us today that we ask and implore you to share with your members. And also after today's presentation, surely ask her questions after she finishes that. But if you log off today and have questions down the road, or maybe you want to bring her to one of your association meetings, please do not hesitate to reach out to her. She's given us the okay to share her contact information, and she certainly wants to hear from you all. So I'm going to just share a little bit more about Elsie. So Elsie Darcy is the Community Outreach and Resource Planning Specialist at the U.S. Department of Labor, Wage and Hour Division's Phoenix District Office. She has also served as an investigator both in Arizona and New Jersey. And prior to joining the WHD, Elsie worked as a high school teacher for the New York City Department of Education, teaching mathematics, including subjects like algebra, geometry, and advanced math courses. Elsie graduated from the University of Puerto Rico with a bachelor's degree in business administration and the University of Puerto Rico School of Law with a JD degree. Elsie, welcome. Thank you for being here with us today. And we will go ahead and hand it over to you.
Thank you. Thank you so much for the introduction. It's awesome to be with everyone again. I know the last time we were with ROC staff was back in September of 2023. So we're happy to continue along and now extending this to the trades and to our stakeholders in the construction community. My name is Elsie Darcy, once again, with Wage and Hour Division, Phoenix District Office, covering the state of Arizona. And as Jesse mentioned, I am the Community Outreach and Resource Planning Specialist for the Wage Hour Division in Phoenix. I am joined today by my colleague, Melanie Crouch, who is our senior investigator at the Phoenix DO. And she also handles a lot of the laws that we enforce throughout the Department of Labor, Wage and Hour Division, covering the state of Arizona. Just to give you all an overview or a brief summary of some of the laws we enforce federal labor laws that have to do with wages and hours worked. One of the main laws that we enforce is the Fair Labor Standards Act. And that's a law that's been in place since 1938. And it basically covers what are hours worked and the wages that have to be paid for the hours worked by employees covered under this act, along with record keeping, child labor practices, which always keeps us on our feet. But we also have a lot of other laws in place that we also enforce, as well as government contract work in construction. You may be familiar with the Davis-Bacon Act and Davis-Bacon and related acts. With all of the infrastructure projects that are coming into Arizona and the technology sector that is expanding and booming here with the CHIPS and Science Act, we are going to see a lot of work in that arena as well. We also are in charge of visa, guest worker visa programs such as the H-2A in agriculture work and the H-2B program for temporary and non-immigrant worker programs. So that's just a little overview of what we do. There's a lot in place that we oversee, but I want to just give the floor now to Melanie, who is going to talk a little bit about our work in the FLSA and construction. And that may be of interest to you because you're all in the arena of construction work. So I will be on the background, Melanie will talk, and I will be sharing my screen.
Thanks, Elsie. Good morning, everyone. So we just have a quick little PowerPoint that we put together to kind of just go over our basic regulations and what we see out in the field and what we enforce. So one of the regulations that we enforce is the Fair Labor Standards Act, and it's probably what we, the type of investigations we see the most are the Fair Labor Standards Act. You can go to the next one. So under the Fair Labor Standards Act, we have minimum wage, overtime, record keeping, and child labor. There needs to be coverage, which we're going to discuss in some of the next slides in order to be able to enforce the act. There's also retaliation, which isn't listed here, but a company can't retaliate against a worker if they do file a complaint with us or if they're complaining about their wages. So in order for the FLSA to apply, there has to be a relationship between the employer and employee. We're going to go into this. Elsie's going to talk later about misclassification. So I'm not going to go into this in detail, but there has to be an employment relationship. We see a lot of issues right now with construction companies specifically, where they have subcontractors or independent contractors. We also see a lot of labor brokers out there, and we have to find a connection between them and the employer who pays them in order to be able to enforce the Fair Labor Standards Act. A lot of times workers are misclassified as independent contractors, but we do find them to actually be employees. And Elsie is going to go into detail later about what the difference is between an employee and independent contractor. But a lot of the times they'll misclassify them in order to not, pay them properly or to avoid worker protections. Okay, so coverage. There are about 135 million workers, and there's only about 800 to 900 investigators. There's not a lot of us, but we try to be strategic in the way that we initiate our investigations in order to, try to leverage our resources and to be efficient and try to get everyone in compliance and create a equal playing field for all businesses. So there's two types of coverage. There's enterprise coverage and there's individual coverage. Most of the time we are dealing with enterprise coverage. Enterprise coverage is a company who makes more than $500,000 in annual dollar volume a year. This is sales or total business, and they have 2 or more employees. We see this the most in construction is that there's enterprise coverage. So when we're taking any type of complaints, we'll ask those type of questions like how many employees are there, how much do you think they make, to kind of gauge how large the company is. We'll do some research. When someone files a complaint, sometimes they won't file the complaint specifically against the company. They might file it against like a crew lead or a superintendent. So we just have to find that connection and who is the actual employer, and establish coverage to be able to enforce the law. Sometimes they might file a complaint against a company who's new and doesn't meet the annual dollar volume yet. So then we do not have enforcement yet. The other type of coverage is, individual coverage. Individual coverage, we don't see as much in construction. We might see it like someone who's processing credit cards in the office might have individual coverage. They have to be involved in some type of interstate commerce, and it is coverage per week. So if they're processing a credit card and there's interstate commerce, so like the credit card usually is going like across state lines, if that makes any sense, or if they're loading or unloading items that have crossed state lines, there's different types of individual coverage, but for the most part we're looking for enterprise coverage. So we're going to get into minimum wage. Federal minimum wage is only $7.25 still. The state is higher. So in a non-overtime work week, we can only enforce $7.25 an hour. An employee has to be paid at least $7.25 an hour for all hours worked. If it is in an overtime work week, which we're going to go into a little bit, we can enforce the higher rate of pay. But if they're working less than 40 hours in a work week, we can only enforce $7.25. A lot of the times we will, if someone files a complaint and they didn't work overtime, we will tell them to probably file with the state because they can get a larger return. Most construction workers are paid way over the minimum wage anyways. We don't see a lot of minimum wage issues where they're being paid less than $7.25. Maybe they're being paid less than the state. Okay, so hours worked is an issue that we see a lot, and this is with minimum wage and overtime. So you might have someone who is working off the clock, like they, you know, are on a job site and they finish doing the actual job, but they're doing cleanup and they are told to clock out to clean up. They're still working, so that's considered hours worked and should be recorded for, and they should be paid for that time. Also, waiting time, we'll see times where a crew will arrive to a job site and the material's not there. So they're waiting for the material to be delivered. And if they're waiting for that material to be delivered, they're engaged and they're ready to work. So those are hours worked and they should be recorded and paid as well. Meals and rest periods, any breaks of 20 minutes or less, they should be compensated, but if it's over 20 minutes, then we'll consider it kind of like a lunch break where they can deduct for 30 minutes, but they have to take the break. They can't be deducting for lunch and the worker is not taking their lunch. We'll see that a lot of times, especially if a company is using like a electronic time app, it will automatically deduct an hour lunch, but the workers aren't actually taking that hour lunch and they're working. You want to just make sure that the employee is taking that lunchtime. This screen, okay. And then next up was training time. If there's any type of training that's happening, they need to be paid for those hours as well. Travel time between jobs, if they're working on multiple job sites in a day, that's hours worked and should be recorded and paid. And sleep time, you won't see that in the construction industry, but well, hopefully not. But sleep time we might see with like group homes where they have to sleep in between shifts. So overtime is our bread and butter with Fair Labor Standards Act. It's what we enforce the most. Any covered employee, non-exempt employee must receive 1.5 times the regular rate of pay for all hours worked over 40 in a work week. Each work week stands alone. So we look at each individual work week to see how many hours they're working and to see if overtime applies. All those hours worked that we just talked about have to be counted when we're determining overtime hours worked. This is where we'll see the most violations, especially in the construction industry. A lot of times companies will be paying their employees piece rate or per contract, and they won't be actually recording the hours worked. And they just, let them work as many hours as they want to complete a project, and they're paying them a certain piece rate or contract rate for work. But those are still covered employees for us. So those hours should be recorded and they should be paid overtime for anything over 40 hours. Same with like if they're being paid a day rate, paying cash. We'll see a lot of times the companies are paying straight time for overtime, which just means that they're paying their regular rate for all hours worked. We'll see like 2 checks. There's different things we'll see out there, but overtime is the biggest violation that we see. So some common overtime violations that we see, there are some exemptions from overtime. There's administrative exemptions. If you're like a supervisor, you could possibly be exempt. But like sometimes we'll see foremen, they'll have foremen as exempt, but the foremen are working alongside the crews and they technically wouldn't meet any type of white collar exemption is what we call it, 541 exemptions. Another common overtime violation is improper deductions. They may be deducting for tools, or sometimes someone might like break a machine or something and they're deducting them and taking them under what they should be paid in that overtime work week. So you have to be really careful with deductions. We'll also see misclassification, which we're going to go into more. That's one of our big things. Whether they're misclassified as an independent contractor or they're just someone who's not on payroll. We'll see a lot of workers who may work like a crew lead is getting a large check and they have a crew under them, and then they cash the check and pay everyone out under them. So misclassification is a big common overtime violation, that they're not tracking all hours worked. they're not combining hours, if maybe they're working on multiple sites or for multiple locations in a work week. So yeah, over time, we see a lot of different, I guess I'll say, schemes out there to avoid paying workers properly. Youth employment, so child labor, we're actually seeing more child labor than we used to, especially out on construction. A lot of times we'll see like maybe an employee's bringing their kid with them to work because they're out of school or something like that, but they have to be really careful because there's really not much anyone under the age of 18 can do on a construction site other than very basic cleanup. As soon as they touch a tool, they're probably going to be out of compliance. So we don't recommend anyone under the age of 18 to be on a construction site. And then there's our work violations. So anyone under 14, they shouldn't be working, except for there are some exceptions. 14 and 15, they can work, but there's hour regulations. They can only work a certain amount of hours per day. And then it depends on school, if school's in session or out of session, the hours that they can work. 16 and 17-year-olds can work unlimited hours, but there's some hazardous occupations that they shouldn't be working in. Record keeping, so all employers, this probably is the biggest violation that we see out there, but there's no monetary finding to record keeping. So all employers are subject to the provision and they have to keep and preserve records. We don't, in the regulations, it doesn't say specifically how those records have to be kept, like if they need to have a time clock or how they need to record hours worked, but they have to record hours worked. And then every covered employer has to keep the basic records for each worker. When we do open investigations, we'll ask for these records. So it's important that employers keep their records. And if they don't have the records, then we have to reconstruct hours or reconstruct payments. And sometimes that may lead to them owing more money than it's actually owed because we're reconstructing and the burden of proof falls on the employer. So it's very important to keep track of hours and records. These are a few items that we do not actually enforce under the Fair Labor Standards Act. We don't enforce any type of vacation, holiday, sick pay. The state has sick pay, so if someone is trying to file with us for sick pay, we'll send them to the state. Meal or rest periods aren't actually required by this. We don't require that they have to give them meal or rest periods, but if they are over 20 minutes, they have to be free of work and able to take their full lunch period. We don't enforce any type of premium pay for weekends or holiday work, limit of hours for anyone over 16, and we don't enforce pay raises or like a promised rate of work. Sometimes someone may be like, oh, they promised me $18 an hour. That's not something we can enforce either. And these are just some of the other acts that we enforce. Davis-Bacon Act is usually construction on government funded projects. A lot of the times we will there'll be government funding on HUD projects. And then when there is Davis-Bacon, the employer has to pay prevailing wages in accordance to the position that the worker is working in. And there's a wage determination on the project that states what those wages are. Same with Service Contract Act, that's also on government funded projects. We enforce the visas H-2B, H-2A, H-1B. We do see construction workers come in on the H-2B visa. So we may see them on a construction job site, even on a Davis-Bacon job site. So then we'll have 3 regulations that we're enforcing at once. We'll have Fair Labor Standards Act, Davis-Bacon, and H-2B visa. We enforce the Family Medical Leave Act, Pump Act, and lots of other regs as well. And I think that's it. That was just kind of a basic of PowerPoint of what we enforce before we jump into misclassification.
All right, so now it's my turn, and I am going to share my screen and give you guys a little primer on what is misclassification under the laws enforced by the Wage and Hour Division. So as Melanie gave the introduction here, we have a various number of laws enforced by us at DOL Wage Hour Division, but we want to ensure that everyone knows what these laws are, what is coverage, because coverage is the determining factor here under these acts that we enforce to determine if there is, the employer is covered by the act, and then there is an employment relationship, which means there is an employer and then there is an employee. And we're going to talk a little bit about what that all means and how we get into these misclassification issues where instead of workers being treated as employees under the acts enforced by us, they get treated as independent contractors. And that's where we run into issues. As we want to make sure that you are all aware, informed, know what the rules are, and that everyone is on the same level playing field. So everyone is following the same rules of the game. So here's a little disclaimer, same as with the other presentation that Melanie introduced earlier. Again, the information presented does not carry the force of legal opinion. It's meant to be as general information, but you can always consult the Federal Register and the Code of Federal Regulations that remain the official source for regulatory information published by the Department of Labor. And I can share those links with you as well as if needed, so you guys can have that information as well. Okay, so under the acts enforced by the Wage and Hour Division, we help workers, we help advocates, we help employers and other stakeholders understand the worker protections and employer responsibilities. We want to make sure that everyone knows what their rights are, what the benefits are, what the protections are. But also for the employer community, we want to ensure you know what your rights, what the obligations of the employers are to their workers. So you're not out of compliance, you're following the rule, and you're also just making sure everyone is treated the same way and getting paid for their time worked. So we are throughout the entire country, U.S. Department of Labor. We have offices throughout all 50 states. Here in Arizona, as I mentioned earlier, our main district office is Phoenix. And then we have our area office in Tucson. And so we can always get that information as needed. Okay, so education promotes compliance, and we want to make sure that there's education and outreach for workers. There is our website for what we do with our education and outreach for workers, and then as well for employers, and making sure that all of that information is correct and complete. So what it means to understand worker classification under the Fair Labor Standards Act, and what does that mean under the laws that we enforce. Today, I'm going to talk a little bit about what is misclassification and how this can have a negative effect and impact on employees' wages. Basically, benefits and protections are out if employers are misclassified as independent contractors instead of employees, as they should be under the law, and you strip them of a wide variety of protections such as workers' compensation, unemployment insurance, and health insurance when you misclassify them instead of treating them as employees. So what is misclassification? Misclassification occurs when a worker is considered an employee under the law, but is treated as an independent contractor by the employer. So the FLSA applies whenever there is an employment relationship between an employee and an employer. And as you can see from the graph here, you have an employment relationship and you have the employer. You also have the employee, and how that affects that relationship is an act or condition of employment. So under the Act, it defines an employee to mean an individual employed by an employer, and it defines employ to include to suffer or permit to work. So the FLSA defines broadly the scope of who is an employee under the Act. And as a result, most workers are treated as employees under the Fair Labor Standards Act. Here at the Wage Hour Division, we do not rely on titles or tax information to determine whether someone is an independent contractor or an employee. We look at the nature of the relationship. So we always get questions from employers that say, well, I issue them an IRS form 1099 at the end of the year, so they're an independent contractor, or I treat them as an independent contractor, not as an employee. Under the Act, under the law, that's not what controls. So unlike true independent contractors who are in business for themselves, employees have less control and ownership of the businesses where they're employed. So calling an employee an independent contractor or giving them a 1099 form does not make them an independent contractor under the Fair Labor Standards Act. So here's just the different costs of misclassification. You may think that as an employer, you're getting a cost savings by not treating them as employees, but misclassification involves these costs. It denies employees the right to minimum wage, overtime, and other protections. It creates tax burdens on misclassified workers because now the burden shifts to them to file their taxes instead of the employer and sharing that burden together. And it also creates unfair competition for responsible companies that comply with the law. It also leads to tax revenue loss for the government. So again, misclassification creates an economic burden for law-abiding business owners who can't compete on a federal level, on a level playing field, with employers who are evading federal requirements by misclassifying workers. So all of these costs have to be taken into account. And here's just some common misconceptions about what it means when you misclassify a worker. So employers may not misclassify an employee for any reason under the Fair Labor Standards Act. That's the rule. Employees cannot sign or give away their rights under the Fair Labor Standards Act. There's no agreement that is in place that just gives those rights away. And even if employees feel in certain situations they would best be served as independent contractors, their proper classification under the Act is still based on the facts, on the individual circumstances and the law, not on what the worker prefers or what the employer prefers, or prior agreement or registration or form of payment. And an employee may not be misclassified either based on where they work, okay? So it's not based on agreement. So we're going to go into a little bit about how misclassification is determined. And so under the Act, we look at an employment relationship and if an employment relationship exists. So we look at the total picture, and that emerges from the facts and circumstances of the work. No single fact or circumstance is sufficient or predominant. So in order to make that determination, we look at a number of factors together, and they all must be considered and weighed. It's called the totality of the circumstances. And here we look at the existence of an employment relationship. It will depend on the weight of all the factors, if it leans in the direction of treating that person as an employee, or if they're actually an independent contractor. And most workers are in fact employees. So we look at factors such as scheduling of work, pricing and selection of services, products and supplies, financial responsibility for quality assurance, investment in business tools and equipment, insurance and marketing may also be relevant. what we look at is what's called the economic reality. And here we have a look at the total picture. So we determine, how does the individual work? Where do they work? Who determines the conditions, nature, timing, and pricing of the work? Those are questions we all ask. To what degree is the individual financially invested in the business, supplies, equipment? To what degree does the individual hire himself or herself out to others or provide services for other businesses? So under the FLSA, an employee, in contrast to a worker who operates a business of his or her own, is one who, as a matter of economic reality, follows the path of an employee and is dependent of that employer for work. So an employee generally has limited control over where, when, and how work is accepted, assigned, and completed. Now, an employee may have some investment in tools and equipment and may use a private vehicle in the course of their work to get around, but is less likely to carry their own insurance, for example, or does not sign contracts on behalf of the company. Do they have financial liability for the business? Or do they determine the type and prices of services and products? So these are all things that we all look at, and it's part of our analysis of this economic realities test. And here is just a nice table of how these factors are all viewed together. You can see on one side the employee, how does that look like? And what does it look like versus an independent contractor? So for an employee, they are working for someone else's business versus an independent contractor, they're running their own business. An employee's pay is really paid hourly, salary, or by piece rate. It could be either of those. An independent contractor is paid upon completion of the project, usually. An employee uses employer's materials, tools, and equipment. An independent contractor provides their own materials, their tools, and equipment. They're not dependent on the employer or the principal for that. The employee typically works for one employer. Here, the independent contractor holds themselves out to a lot of people at the same time, and they work with multiple clients. And an employee has this continuing relationship with the employer. It's called permanency. But the independent contractor has a temporary relationship until project is completed, and then that's done. The employer decides when and how the work will be performed. The independent contractor decides when and how they will perform the work themselves. They don't need to rely on the employer for that. And the employee assigns the work to be performed. The independent contractor decides what work they will do. They don't need to consult with the principal or the employer to know how the work is to be performed. So here's a little going into what these factors mean. And the first factor that we look at is work integral to the business. So here, this factor focuses on how important the work is to the employer's business. Work is integral to the employer's business if it is part of the production process or is a service that the employer is in business to provide. So for example, a tile installer performs work that is integral to the business of a flooring contractor. A flooring contractor relies on installers to provide the primary services offered by the business. Therefore, the work of those tile installers is integral. So it's always good to keep in mind, is this work essential? Is it integral to the business, my business as an employer? It's part of my production process or the services that I am in business to provide. If so, then that may qualify for the factor of work integral to the business. Is there opportunity for profit and loss? Here's another factor that we look at. And the main question we have here, does the worker make independent business decisions that affect profit and loss? So independent contractors typically have the ability to make independent business decisions, such as decisions to make investment in new equipment, expand or limit services, hire staff, or set quality standards and assurances. To determine this independent contractor status, we consider such questions as whether the worker has the authority and ability to add or discontinue a particular product line, change pricing structure or fees, or to add staff or reduce the size of a department, or to determine when and how refunds are offered. Now, if the worker has full opportunity for both profit or loss, they are more likely an independent contractor. So for example, an independent contractor may make a decision such as to expand services and gain profit as a result of increased business, or suffer losses if customers don't purchase those services. Though an employee may work more or fewer hours, depending upon the demand for services, they don't typically determine when to expand a business or how it operates. So, for this opportunity for profit and loss to really be effective in knowing if this is an independent contractor or an employer, we want to know, does this worker make independent business decisions that affect profit and loss? Investment in facilities and equipment. So here we look at the questions, have the workers made an investment that indicates they're in business for themselves as opposed to purchasing tools of the trade that employees usually purchase as part of their work? So investments suggest an independent contractor status if the investment is substantial and the investment is used for the purpose of sustaining a business beyond the job the worker is performing at the time. So this factor compares the worker's investment in the business to the employer's investment in the business. And the worker and employer must have similarly weighted investments in the business in order for this factor to suggest that the worker is an independent contractor. So for example, a construction worker may drive a personal vehicle to the work site and use his or her own tool belt during the course of the workday, part of the day, and still be an employee, not an independent contractor. These expenses and investments are common for employees in the trade. Just because they use their own car and just because they use their own tools that they bought doesn't make them an independent contractor. So a true independent contractor under the law might invest in a truck for his or her own business, carry insurance for the company and employees who work for his or her business, rent an office space, maintain service contracts for equipment or vehicles, and pay for business-related licenses and fees. This is all part of this factor of investment in facilities and equipment. So keep this in mind. A worker is not an independent contractor simply because they purchase tools or equipment to do a specific job. Rather, that worker's investment must be a substantial capital investment that is used to sustain an independent business in order to know if it's independent contractor or not. Skill and initiative. This is another factor we look at. Workers with specialized skills who can deploy them at their own discretion are more likely to be independent contractors under this factor. The key phrase here is at their own discretion. So the use of specialized skills without freedom to decide how and when to deploy them would be evidence that a worker is an employee. So specialized skills do not necessarily indicate independent contractor status if the worker is economically dependent on the employer. So we may have a worker who has these specialized skills, this craft, but if the employer trains the worker to do that, or does the work require little training? If the employer trains the worker, this suggests the worker may be an employee. But the main key here is at their own discretion. Does this worker perform this work at their own discretion and decide how and when to work? If not, then it's more likely that they're an employee and not an independent contractor. Permanency of the relationship. So here we look at if there is a permanent or indefinite relationship with the employer. If there is, this may suggest the worker may be an employee. It's unlikely that a true independent contractor will choose to work with only one firm or one company or one place. Instead, a true independent contractor will market or sell services to a variety of users. However, if there is not a permanent or indefinite relationship, that does not automatically indicate the worker is an independent contractor. What matters is whether the impermanence is a result of the worker's choice, which suggests there is a true independent contractor status, or the structure of that particular industry or employer, which may indicate the worker is an employee. So here's a couple of questions to consider here. Is the relationship between the worker and the employer consistent? Is there an end date to the worker's relationship with the employer? Now, if these questions are no, there is a relationship, that relationship between the worker and the employer is not consistent, or there is no end date to the worker's relationship to the employer, this may, and I always say this throughout all these factors, it may suggest an independent contractor status. But again, we look at all of these factors as a whole. It's the economic realities test, it's the total circumstances that we look at. So this does not alone indicate that the worker is an independent contractor, but it's something that we do look at, and it must be given the same weight as the other factors. Control. This factor is important as well as the other ones, but here, an employer generally controls the worker through setting the hours, directing a method of work to be performed, setting prices, or supervising or disciplining the worker. The more discretion and decision-making that is done by the firm, by the company, by the employer, the more likely the worker is an employee. Okay, so that control can be direct or indirect. For example, an employee may directly control a worker by telling the worker which tasks to do and how to do them. Simple. An employer may indirectly control a worker by supervising the quality of his or her work. An employer can still exert control over a worker even if that worker teleworks or works off-site. However, the employer's actual exercise of control is not necessary, as all factors must be considered. Even if the employer does not control, that does not automatically indicate the worker is an independent contractor. What matters is whether the worker actually exercises control over the meaningful parts of the relationship. For example, does the worker decide when and how work is performed and for what fee? Okay, so in other words, a worker may set his or her own hours within flexible scheduling arrangement. They may telework or they may perform the job in some combination of on-site and off-site work, and they may work without direct supervision and still be an employee. Another factor is independent business organization. And here this factor looks at, does the worker operate independently of any one employer? Okay, so does the worker compete with others in the market for the work? Do they advertise or plan work or demonstrate initiative, suggesting that the worker's in business for himself or herself? If there is little or no attempt to attract new business and the worker is content to wait to be offered more work by the employer, then that is one sign of an employment relationship. Independent contractors, on the other hand, they're not reliant on one source, business, or firm for all of the work. They hold themselves out to everyone and anyone. They seek out multiple contracts rather than receive assignments. Okay, here's a good example, a window installer who travels to locations provided by the firm to produce estimates based on that firm's pricing and who installs windows according to contracts held by that firm is likely an employee. Now, whereas a window installer negotiates his or her own contracts, solicits business for himself or herself, or markets his or her own services, then that is more likely an indication of an independent contractor. Here are some common problems that we look at or that we find when we see misclassification under the laws that we enforce. Working at multiple locations or multiple contracts is not the same as working for multiple employers. That's not the same thing. Construction workers, janitors, workers, home care workers, for example, they often work at multiple locations as part of their employment. It's just part of the way the job is done. This does not mean they're independent contractors. The same thing goes for working from home, working a flexible schedule, or working without direct supervision. That does not make a worker an independent contractor. And then the degree of specialized skill possessed by a worker is less determinant than the amount of control, discretion and independence actually exercised by the worker. And all investments in a trade are not equal. The investment of an independent contractor in the business and not just tools has to be substantial, has to be big in order for that person to be considered an independent contractor and not an employee. So here are some ways that we can help. We are here to answer any questions, actually receive information that you may feel that is credible in either filing a complaint or just asking questions about what the law is all about. With us, you can file a complaint at the Wage and Hour Division. Complaints can be submitted by phone as well as in person. We are open and ready for business. Complaints can come from third parties. They don't necessarily have to be within that relationship of employee and employer. They can come from outside parties as well. Complaints are confidential and we keep them private as to the best extent under the law, to the maximum extent under the law. And there is no fee to file a complaint. So with us, if you have any questions, if you have the information available to file a complaint with us, it is completely free and there are no charges associated with that. Here are some online resources that you will also have as well as part of the presentation slides that will be shared with you after today's session. We have our website that's up and running at DOL with the landing page of misclassification of employees as independent contractors. And this is important that this information be reviewed and just shared with everyone. There's a final rule that has been set to go, and it's going to come into place in March of this year, March 11th, it will go into effect. So we wanted to share this information with you all. Make sure you have this information up to date, and you can always consult these online resources for additional questions. We have FAQs, we have our fact sheets. Fact sheet 13 is really helpful that just breaks down all of the factors that I just mentioned to you earlier about the misclassification, these economic realities test. Am I an employee or an independent contractor? And you can always check out our Know Your Rights video series, Misclassification as an Independent Contractor, so you as an employer know what your responsibilities are and how you should be treating your workforce as an employee or as an independent contractor. We have other online resources as well, worker.gov, irs.gov, as well as workcomp.gov. Now, these are resources outside of DOL, outside of Department of Labor, but they're very helpful in just learning more about just answers and questions, especially at the IRS website. It provides answers to tax questions and helps you understand federal tax rights and responsibilities. And at workcomp.gov, it provides worker compensation rules that require employers to provide benefits to injured employees. So that can be helpful on that side for worker compensation matters. And then here is the information for us at our Wage and Hour Division. You can always visit us online. That is our website there. You can also call our toll-free information and helpline at 1-866-4-US-WAGE at the number listed there. That is our main helpline, but that can connect you not only here in Arizona, but throughout the 50 states that we are in. You can also find our contact information for all of our district offices and field offices at that website there for contact. And here in Arizona, we have our Phoenix district office line, which is shown there, as well as our Tucson area office line, which is also noted on the slide. Remember, you can call our toll-free information and helpline. We are available from 8 a.m. to 5 p.m. in your time zone. So I think that is it for me today, and we are open to any questions that you all may have regarding the FLSA and misclassification rules. Thank you so much.
Elsie, Melanie, thank you so much. A great deal of very important information. Thank you for sharing that.